Good morning and welcome to another live technical analysis session. We're starting off with the euro against the US dollar. Germany's ZEW economic sentiment figures were just released. If I'm not mistaken, the current conditions has worsened, whereas the current economic conditions figure has improved. The industrial output rate, if I'm not mistaken, has also come in higher than expected at 1.8%, which is why we are seeing the euro strengthening against the US dollar. If we look at technicals, we're going to be adding in support and resistance levels on a 4 hour time frame. We have R1 at 1.10, R2 at 1.11, R3 at 1.12. We used to have support at 1.0, at 1.0915, which was broken below and has now turned to resistance. So this could be R1. And then for R2, we could be using the daily chart or the 4 hour time frame. We are using 4 hour or a daily. Let's look at it from a 4 hour time frame. Resistance, one could argue that it is at 1.09483, R2 at 1.0, R2 at 1.10057, and then we could place R3 at this peak here, support, broke below, acted as resistance, 1.10715. We can use a 4 hour time frame like that. For support, we can place it at 1.08844. That could be our S1. For S2, at the beginning of this upwards moving trend line, but if you compare that to the R1 and R2 levels, that's a bit too far away. So this was support, broke below, acted as resistance, temporarily broke above, and then acted as resistance again. Just look at the price action here. And then we can place that S3 level at this low that we had mentioned before. So using a 4 hour time frame, we have identified our support and resistance levels, and I will now be essentially changing the text labels, indicating the downwards moving trend line that I have just noticed, and we'll look at the technicals together. So if we round our S1 level, it is at 1.0885. That would be my S1. So that's S1. Then for S2, 1.08266. I will be discussing the possibilities for the ECB's interest rate decision later on this week, and in particular, that is set to occur on Thursday. So we are rounding this line up as well. There you go. This one is 2. For S3, 1.0775. So that is S1, S2, and S3. R1 at 1.094950, if we round that up. R2, 1.1005. R3, 1.1070. That is our 3 resistance line. So following the release of Germany's ZEW economic sentiment figures approximately 5 to 6 minutes ago, the next big test for Euro traders might be, and most likely could be, the ECB's interest rate decision. So I don't know the Euro IS currently following the release of Germany's ZEW figures, but prior to that, it was penciled in at 98% probability for the bank to cut by 25 basis points. So the slightly better than expected figures could potentially increase that sentiment that the bank might cut by 25 basis points. So essentially, there will be more emphasis on ECB President Lagarde's press conference following that decision. If she hesitates to commit to future rate hikes, we may see the euro weakening. Excuse me, if she fails to commit to future rate cuts, we may see the euro strengthening. Whereas if she confirms and commits to further rate cuts, we could see the euro weakening further. I have identified a downward moving trend line, which was incepted on roughly the 8th of this month, so the 8th of October. It is a downward swing trend line. The Bollinger Bands appear to be tilted towards the downside. The RSI is not at 50, currently registered as a figure near 40, which does imply a bearish market sentiment. The mid range of the Bollinger Bands may act as a resistance level, so this is a retracement and then might continue in its downward trajectory. Moving averages, so we had a death cross formed at this point here, where the 100 moving average crossed below the 50 moving average. So these are long term moving averages. So long term bearish trend may have been initiated. So, all in all, the technicals do appear to be bearish in nature, and thus we would maintain a bearish outlook. For that to continue, however, we would require a clear break below S1 at 1.0885. Next potential target for the bears could be that S2 support line, which you can see to the right of your screens. Now, in the event that we are wrong, we would like to see a clear break above this downwards moving trend line as a first indication that the downwards momentum has been temporarily suspended. And for a sideways bias, we would require it to move up to that R1 resistance level, fail to break above R1, and then maintain a sideways bias between S1 and R1. Now, on the flip side, if it breaks above R1, then we would adopt a bullish outlook. If we look at the 15-minute time frame, we are seeing some euro strengthening, but this 15-minute candle, if it closes in the reds, could be clearing out sell orders here, seeking that liquidity before continuing on its descent. Checked out liquidity. Let's see if this is uh, lower high. Tested twice on that S1 level. Would need to clear that S1 for our bearish outlook to be maintained. But if you are using that 4 hour, you can see it still has some way to go to that downward swing trend line and the mid range of the Bollinger Bands. So that's predominantly it for the euro. Today we do have Canada's CPI rates, and during tomorrow's early European session we have the UK CPI rates. So those are both interesting financial releases that may impact the Canadian dollar, so the loonie and cable respectively. USD JPY, it's just broken above that R1 resistance level of 149.35. RSI is at 60. Does imply a bullish market sentiment. Yet we had noted this steep upwards moving trend line, which may have also implied that the upwards momentum may not be sustainable for a prolonged period of time. So we might be seeing perhaps a retracement down to that S1 level of 146.85. That is for the USD JPY. Now, there are concerns for Asia. And let's take the most recent developments. So, the military exercises from China around Taiwan yesterday, if I'm not mistaken, around 156 naval aircraft participated in those military drills. So, those are concerns about Asia. The biggest concern I have is North Korea and South Korea. North Korea earlier on today blew up a few roads and some train lines that were near the border with South Korea, but on their side, and had traditionally linked the two Koreas. That is a bit of a concern. There are some unverified, and I stress unverified sources, that North Korea's leader has approved retaliation for some drones that entered and were above Pyongyang's airspace earlier on this week. So those are tensions in Asia. Could be facilitating safe haven inflows into gold. We're going to be discussing oil as well. USD JPY, however, we need to simply adjust that R1 level, 149.75. One could also argue that S1 is slightly higher. Going to be taking this wick here, 147.30. That is my S1. For R1, I would be taking 149.75, as I've just indicated. Might be a retracement down to S1, seeking liquidity before continuing on its ascent. GBP USD resting on S1, so 1.3030, which is what we had mentioned and placed as a support level. So finding some support might be to a retracement, potentially close to R1, but I don't see that happening because I have RSI at 40, which does imply bearish market sentiment, and it's quite a long way to go to that R1 level. However, I would not be surprised if we see a retracement perhaps to the mid range between to the midpoint between S1 and R1, and then cable continues on its descent. And we are noting those CPIH for the UK tomorrow. So cable tomorrow at 9 a.m. local will be very interesting to watch. USD CAD, US dollar gaining against that Canadian dollar, taking aim for our 1.3845, RSI above 70. Strong bullish market sentiment. We are maintaining a bullish outlook for the US dollar against the Canadian dollar. Now, the CAD may be weakened due to the recent news surrounding oil as well. As we say in every live, Canada is an oil exporting nation, so changes in oil prices might be affecting the nation's currency as well. And now we have to dive into geopolitics. So, first thing for oil, we are taking OPEC's report, lower demand for the rest of the year. And if you look at the IEA report, that they have sufficient levels in the event of an escalation in the Middle East, so reduction in supply. They can facilitate that potential gap. Essentially, there is a large oil inventory, thus could reduce oil prices, could weigh on that. Canada might also not benefit from lower oil prices. US dollar gaining. CPI rates for Canada later on today might impact the Canadian dollar as well. Lower than expected, thus showcasing easing inflationary pressures could weigh on the loonie, whereas persistent inflationary pressures, so higher than expected, could provide support for the Canadian dollar. But the technicals are bullish for USD CAD. For the Aussie, moving in a downward fashion, Aussie appears to be weakening against the US dollar. RS at 40, testing S1. If it breaks below S1, we are maintaining our bearish outlook, taking aim for 0.6570. So you can take a screenshot of the support and resistance levels that you can see on your screens and then simply monitor how the pairs will react to the support and resistance levels that we've placed together. Would be a good training exercise, essentially seeing how the market reacts. So finding resistance or support respectively, retracement, then piercing through or breaking below, and then continuing to the next support or resistance level. Dollar against the Swiss franc, very nice. Tested that as one level, 0.8550. Bullish outlook for the dollar against the Swiss franc. Target for the bulls is 0.8750. We need to remove this. Crude oil. Now, we did say about the recent reports. There is also something that we should be discussing for crude oil. Now, we've all been expecting a retaliation from Israel against Iran to occur. There are reports, and I'm citing the Washington Post currently, that Israel is taking into consideration the requests by the US government and might not be striking oil and nuclear facilities. Therefore, the elimination of the threat of oil facilities being struck and the reduction of the possibilities of a wider escalation in terms of a regional war in the region could be pushing oil prices lower. So as you can see, and if you look at prior lives, so I'm talking about a month ago as well, these are the same support and resistance levels that I've placed. 71.40 was my R1. It became S1, has now become resistance once again. S2 becomes S1, S3 becomes S2, and so on. So it's broken below support now to turn to resistance, and thus I am maintaining a bearish outlook for the commodities price. RSI 45 dropped below 50. Bears now appear to be in control. So bearish market sentiment for oil prices. Now, It is not a given that Israel will not strike oil facilities in Iran. If they do so, this could easily reverse and we might then adopt a bullish outlook. If they don't strike the oil facilities, maintaining that bearish outlook for WTI cash, and we are using a daily time frame. This becomes our three. Once again, one could screenshot the support and resistance levels and see how the market and the liquid gold's price reacts to our support and resistance levels. As you can see, we are spot on. Even with our two, it wicked up, came back down, failed to break above. So short interest, pushed it lower, broke below support and resistance. And that momentum appears to be carried into today's trading session as we are on the daily chart, daily time frame essentially. So these are daily candlesticks. And then for S3, voila. Let's see. Old support level, nice distance between S2. Heavy support, moved higher. That is my S3 level. Bit close to that S2, but that's okay. 51.95. So that is my S3 support level. So I'm maintaining a bearish outlook as long as Israel does not strike Iran's oil facilities. If they do so, that outlook goes out the window, and we would maintain a bullish outlook for. We would then switch our bearish outlook in favor of a bullish outlook for WTI cash. This needs to be removed as well. Let's look at gold. So we had 2,633 as a resistance level, broken above. RSI is at 56. Does imply bullish market sentiment. Retrace lower. Needs to clear this high for that bullish outlook to continue. We've placed target 1, so our 1. We need to take this into consideration, which is the all-time high figure. 2,685, which is the new R1. Right, $5 above that R2 level. Hypothetical resistance 2,730. And then let's say 2,780 roughly as a hypothetical resistance level at R3. You can also look at the on balance volume. That's a very nice indicator. I like to use it sometimes. And then adjusting that S1 to reflect the new price action. Golden cross, bullish outlook. S1 2,635. So this becomes S2. This becomes S3. And for S1, we need to change this text label. The geopolitical tensions in Asia could funnel some safe haven inflows into the precious metal. Same goes for the expected strike from Israel against Iran. We might see some support for gold prices today. So I have placed support and resistance, hypothetical resistance levels from R2 onwards. So I would be maintaining a relatively bullish outlook if it breaks above R1. If it doesn't, sideways bias between S1 and R1. Intel staying between R1 and R2. Microsoft. So we have been using OBV, which is on balance volume for Microsoft stock price. And I would ask you to look at the charts. So look at the bottom of your screen and then compare that to the breakouts we've had and how this has moved in relation to to the company's stock price. So we had placed an upwards moving trend line, which was then broken below and now acted as resistance. 425.05 was support. It broke below. And then note yesterday's wick, that daily candle, upon which it tried to seek that resistance level. So support turned to resistance. We are maintaining a bearish outlook for the company's stock price, despite the RSI being close to 50. That 50 would imply a sideways bias or a neutral market sentiment, depending on the wording one would like to use. But it has broken below -1 level. It is below the mid range of the Bollinger Bands, tested the mid range, tested support and resistance as well, has broken below an upward swing trend line, which was incepted at 25th of July roughly. Moreover, the on balance volume, you can see it broke below, and I think the bears might be in control. What we are seeing here in terms of the OBV could be a potential retracement. You have higher high, higher low, and has broken a prior high. So one could be theoretically bullish during today's trading session, but I wouldn't be long term bullish. This is concerning. Broken below support, turned to resistance, broken below an upward swing trend line. The RSI might be close to 15, but still I think it has some way to go. For my bearish outlook to continue, I would require the company stock price to break below that new S1, which is 402.10. If it bounces off support at 402.10, so does not form a clear break below, and when I say break, I mean closing below. If it wicks through, I would ignore it. It may have seek liquidity, it may have attempted, and then maybe the bulls pushed it back, etc. So for a clear break, that means it needs to close below that S1 level. If it does not do so, then I would maintain a sideways bias. If it closes below, bearish outlook would be continued. On the flip side, and lastly, if it does manage to break above 425.05, then I would switch my bearish outlook in favor of a bullish one. But I do think that this might be simply a retracement and a test of resistance. So this would be R1. This becomes red. I have R2, 437.90. And I'll add the text label here so that you can see what we're talking about. Ticker MSFT. So this is Microsoft that we are looking at. Should make it easier for you looking at your screens. And this becomes R3. And 468 becomes R4. Now, the reason we do have R4 in this chart is simply because it makes it easier because we had S1 and S2 close to one another and essentially would allow us to be more efficient with our time during our live technical analysis sessions. So as I've said, higher high, higher low, might be a retracement, might be testing R1, could reach to R2, but that break below the upward swing trend line, staying below the mid range of the Bollinger Bands, for me is concerning. And then if you add in the fundamentals, it's concerning for Microsoft's stock price. Now, in terms of equities, earnings season has come back, essentially. Today we do have Johnson and Johnson, Goldman Sachs, Bank of America, Citigroup reporting their earnings. One of the headlines on Bloomberg was that some analysts are expecting Goldman Sachs to underperform its peers. That remains to be seen. We will have, of course, to wait for those earnings before we can make a judgment on whether or not they have underperformed or done relatively okay against their peers. Now I'm cutting myself off because I am trying to find that support level. I'm going to be showing using a rectangle. So if you look at the top of your screens, MT4, MT5, insert shapes rectangle. You can use this to either identify your support and resistance zones, buy zones, sell zones, depending on your own personal preferences. The rectangle I am going to be drawing now is where I would like to find essentially a support level. Makes it easier, and essentially I am showing you what price action I am looking at. So it's from here up until here, and now I am hunting essentially for a new support level. I have my S1, my S2, my S3, and I am looking for that S4 level because we have four. Well, we do have actually five resistance lines, but that's fine. As you can see, one, two, three, four, and then a fifth at 490. But let's look for that S4 support level. This was a nice support level, but it's too far away from that S3. So taking my horizontal line, I'm looking at this peak. So let's remove the rectangle because I can see it's not that nice. Let's zoom in. So this peak here, it gapped up, right? It found resistance and then got filled before moving higher. Hammer formation. I was in a reversal because this candle closed above. That's fair. And essentially, I'm going to be using the opening of this of this bearish candle because it coincides with this wick here. So after breaking above this particular level, the bears tested that this was resistance. So validating this as a support level. So this for me would be my support level. Now I am going to be looking back as well, as I've said. This was the rectangle I mentioned, and we would like to see similar price action validating this level. And in particular, I can see somewhere around here that this was tested. This, unfortunately, I do have to ignore because this horizontal line has crossed through. It's not either on a wick and it's not neither on an opening or closing figure of these two particular candles. Whereas, if you look at the price action around here, we can see there was support, wick down below, found support, broke below, tested as resistance. It's not an exact science, but still, it's good enough for an R4 resistance level. So I would be using 344.80 as that R4 resistance line. But usually we do have simply S1, S2, S3, and that's it. S4 is a bit of overkill, but because we are using this chart for a prolonged period of time, and if one would like to see our prior lives in which we've discussed the particular company stock price, we'll actually see that we've been relatively spot on in terms of our outlooks. So that's also good to know. So that is S3, 344.80. I will be looking at, of course, Goldman Sachs. They have earnings today. NVIDIA 30-minute time frame. There are some talks about potentially restricting NVIDIA's sales to China, and that was, if I'm mistaken, released by Reuters earlier on today. Of course, as always, you should be checking what I say. Simply, you can Google Reuters plus NVIDIA, and then it might lead you to that article. You can read it for yourselves and come to your own conclusions. But in theory, the restriction of sales to adversaries, aka China, could reduce potential revenue for Nvidia and could potentially weigh on the company's stock price. So that might not be that good for Nvidia if they decide to go through with that. For ExxonMobil, ExxonMobil is testing that 122.95. We are on a daily chart as well. And then I would implore you to go back. Remember when we had placed the sideways moving channel, broke below, bearish outlook, bounced off that support level, we placed this resistance level, cleared it through, even tested that R3, and we would be maintaining a slightly bullish outlook for ExxonMobil. Target would be at 125.50 for the bulls potentially, as that was my R3 resistance line. We would This needs to be removed. FTSE, so to 100, staying in that sideways bias. We did say that this may have been an ascending triangle, and at the time we could have been correct. But look, it wicked through, did not close above, and broke that upward swing trend line. So I would no longer be bullish for the FTSE 100. And then one could also use the RSI indicator, which is at 50, neutral market sentiment. Broke below an upward swing trend line, failed to break above R1, sideways between R1 and S1. So not bullish and neither bearish. Tesla, well, for Tesla, we had placed R1, R2, and R3, and we have placed an upwards moving, an ascending trend line, an upwards moving trend line. Note how it broke that R1 level, found support, moved higher, failed to break below R2, tested that resistance, which is now support, broke below an upward swing trend line, RSI is close to 30, and gapped below. So we are actually using the same support and resistance levels. So my S1 would be at 204.09, S2 at 167.08, and S3 at 138.50. Some of you may be wondering because I also did see Tesla's release, so that robo taxi and the van, which do look spectacular from an aesthetic point of view. It's more cyberpunk ish. They're very nice. The issue, I think, for market participants was that there wasn't enough detail in that presentation for the releases. If I'm not mistaken, they did say that the robo taxi might be approximately 30,000 US dollars. But you can see that the reaction on the company stock price wasn't that great. So that is a gap below. If we see another gap, then that would mean that this was a breakaway and then a continuation gap as well. So let's say, for example, Tesla's stock gaps below today, S1, but does gap below this week here. This could be theoretically a breakaway, a continuation gap, and then we would like to see another gap, which would be the exhaustion gap. When that occurs, you might see a reversal occurring. For now, it would be bearish for the company's stock price as it has broken below a support turn to resistance and an upwards moving trend line. So I'm not looking good for Tesla's stock price. McDonald's, on the other hand, above 70, looking good. Might be bullish for the company's stock price. IBM, moving higher. LVMH. So the story with LVMH, you can see formation reversal. There's also a reversal. RSI dipping below 50, bearish. LVMH is a luxury brand, and predominantly sales in China tend to support the company's stock price. If China isn't doing that well, LVMH probably and might not be doing that well in terms of sales. Therefore, could weigh on the company's stock price. We've said it time and time again, and we've been saying the same thing since the beginning of this year. Simply go to January, look at our live technical analysis session, in which we've said we are worried about China, and China continues to be an issue. And I've said this numerous times before. China's issues cannot be solved by throwing money at the problem. They have structural problems at the foundations of their economy. The news that broke out on the Bloomberg terminal of 538 billion US dollars potentially being given to the local governments in China, I don't see the how that's going to help them solve long-term issues. They have an aging population. They have issues with real estate. They have issues with their economy. GDP rates on Friday expected to miss that 5% target. Worrying for China. Look at their trade balance as well. So I would be bearish for LVMH. Technicals tend to support that as well. That resistance level broke above, closed, broke below, resistance, 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 found support, but gapped below. Now resistance support I have placed at 594.54. Simply screenshot, see how the company stock price reacts to these support and resistance levels. Now, if you're interested in the US defense, in the US military complex, so Lockheed Martin, etc., bullish tensions on a global scale. So you can add that to China, Taiwan, and then North Korea, South Korea. Simply bullish for the company stock price. Breakaway gap. I am bullish for Lockheed Martin. Airbus, very nice, clearing a prior high. Slightly bullish. And of course, we do need to speak about Boeing. Google stock price, not exactly bullish, not exactly bearish, which means sideways bias between S1 and R1, which could be slightly readjusted just above 163.98. Deutsche Bank, slightly bullish. The sharp decline in the R side is a bit concerning. This is not exactly an island formation, or there is a particular formation upon which this doji would be above the body of the left candle and the body on the right shoulder. That is not the case, but still, it is a reversal formation. Decision, reversal, bearish for Deutsche Bank. Dow Jones 30 moving higher. Nasdaq a bit of a retracement. US 500, so the S&P 500 breaking above R1, taking aim for 5,900 as our resistance level. Bullish overall for US stock markets, and I think we've actually reached the end of today's live. Let's see if I can find Boeing before we finish, because Boeing has its workers on strike. They've entered their fourth or fifth week currently. Boeing has announced that they're going to be firing some of their workers, which I don't think will go down well with the unions. I expect the strike to continue, and then that could weigh on the company's stock price. So these are FX pairs. Where is Boeing? Have we removed it? No, Biggie. If there is anything you would like to see, so I'm talking about either Goldman Sachs, Johnson and Johnson, and Citigroup. Now is the time to ask, because I will be doing the last pair for today, last pair or stock price. And if anyone has a question, now is the time to ask. Otherwise, I'll be doing Boeing, and I'll be ending today's live. I'll see you all tomorrow. So just waiting. Let's see. Volkswagen. Where is Boeing? Boeing sticker is BA. Hashtag BA. VMH, Airbus, BMP, Sociedad General. Let's see. Rio Tinto, British Petroleum, Tesco, Vodafone, HSBC, Lloyds Bank, T Group, NIO, Coinbase, Goldman Sachs is here for solar. Let's see, where is Boeing? So I guess I will be just doing Boeing. So the issues, the potential firing of workers, in theory, could reduce costs and under normal circumstances could provide support for the company stock price. But with your workers on strike and you sacking employees, not a good picture. So I would be more concerned about them laying off workers, because that would, for me, aggravate even more the unions. And the longer that continues and the longer they're on strike, the worse Boeing stock price may be. They may have delays in their airplanes, which, based on the historical record since January, have been absolutely horrible in terms of quality production. And that is not me saying it, it is the news that came out for the doors, the wheels, and essentially a lot of stuff they've manufactured, in addition to the spaceship they sent, which wasn't working, and then they asked Tesla, not Tesla, SpaceX, to essentially rescue the stranded astronauts. And that is facts, not an opinion, but it is at the end of the day my opinion, because I do believe that the issues faced by the workers and the potential delays could further aggravate those issues. So yes, it's not just facts, it is a combination of fundamentals and my own personal opinion, which is why I would be bearish for the company's stock price. Support 148.43, support as 145.92, resistance 151.95, 154.45 as potential resistance R2, and then R3 around 57.15. But I do have to stress that this is my own personal opinion, and I am simply concerned that the longer this strike goes on, the worse Boeing's stock price might be. So, maintaining a bearish outlook for Boeing. And with that, that does it for today. Thank you for tuning in, and I will see you all tomorrow.
Hi everyone, welcome to today's webinar. For today's session, we're talking about custom indicators and EAs on your MT4 and MT5. So let's just go ahead and get started. As per usual, we're starting off with our risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer, this information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll look at what are custom indicators on MT4 and 5, what are some EAs that you can use, various types, and where to find them, how do you use them, and how do you backtest them. Okay, so if you guys have any questions throughout the webinar, feel free to just pop them into the chat and I'll be happy to answer them. Okay, so what are custom indicators on your MT4 and 5? So they're basically independently developed in MQL4 by a user, functions as a technical indicator, and are basically graphical displays of custom calculated formulas. So here's an example of a custom automated daily and weekly pivots indicator. You can see here the daily line is the purple line, weekly is the blue line, and then our monthly pivot is the gray line. Another example of a pivot points indicator, you can see here, it basically works like your normal pivot points indicator where it has your pivot point, your S1, S2, and R1, which are basically your support and resistance levels. So those are pretty simple indicators. Here is an example of a more complex custom indicator. So this is on MT4 and it's for the pair pound dollar on the H1 chart. So we can see that for this particular indicator, it uses the moving average cross over the trend following strategy. So this custom indicator has multiple confluences such as moving average, ADX trend, and trend signaling on the higher time frames. So this shows us that custom indicators can be pretty flexible in terms of confluences, and users can be creative with it if they decide to create their own indicators. Okay, so what are some expert advisors or EAs? They are basically developed in MQL4 as well as 5, and it's a software that automates trading functions based on algorithm. So it basically notifies traders of trading opportunities and suggests trades that can be profitable. Different types of EAs. We have the scalping EA, news trading EA, breakouts EA, and hedging EA. So it really depends on your trading strategy and what exactly you are looking for. Here's an example of an automatic trading EA. You can see at the corner here, it tells you the spread and it tells you a suggested lot size, what margin you should use, leverage, take profit, where you should place your take profit, stop loss, so on and so forth. Similarly, here's another automatic trading EA, but it tells you the same thing. Okay, and another one, um, yeah, pretty much tells you the same thing, the account's profit or loss, account equity, drawdown percentage, spread, lot size. So where do you find these EAs and custom indicators? You can find them on your MetaTrader market page. Some tips is to purchase from sellers with excellent reviews and to be careful of any advertisements and to test these on demo accounts so that they don't affect your capital. Next is Fiverr. So it would be helpful to engage a coder if you have a specific strategy for your custom you to white label your service after licensing your custom EA. Okay, Forex Factory website. So we have mentioned Forex Factory in the past, but more so for the economic calendar. But they also provide you with some recommendations for best expert advisors that are free. Or, of course, you can simply Google it as well. So how exactly do you use them? So you double click the EA that you would like to use on the Navigator tab on your MT405, enable the following options, and then click OK. So you allow live trading, allow modification, and DLL imports. And yeah, there you have it. So now let's look at how you can backtest these indicators. So just an overview of backtesting. It basically uses historical data to test your strategy and allows you to understand the behavior of your strategy so that you can fix it and improve it. So what exactly it is? Backtesting in trading is basically simulating the process of trading while using a set of rules over previous price data to see how much money would have been made or lost if a trader had followed the same strategy. So it's basically a retroactive test where a trader enters a set of values or rules like a currency pair, time frame, and technical indicators. Then the automatic backtesting trading system can analyze the tick data and show you what would have happened if you had taken the chosen strategy. Some things to watch out for would be your net profit or loss, volatility measures, averages, and ratios, and analyzed return. Okay, so what is tick by tick backtesting? It's basically it uses in-depth data and volume weighted into price. It involves creation of elaborate models and it prevents unexpected surprises and it also simulates your trade execution. So this is an example of what your backtest report looks like, and there are four key areas that you will need to look at when you produce your backtest report in MT4. So that would be those highlighted here, your total net profit, maximum drawdown, total trades, and profit trades. Okay, so what exactly they mean? Firstly, total net profit is the overall financial outcome of trades generated by a trading system if it had been used in the past. So it indicates the potential profitability of a strategy, although it doesn't guarantee future performance. This parameter provides an estimate of the potential gains from using the system. Secondly was maximal drawdown, and this refers to the largest loss experienced by the trading account in both monetary value and percentage relative to the account balance. So a lower drawdown is generally preferred, but it depends on the trader's risk tolerance and account size. So, for example, if a trader has $10,000 with a risk tolerance of 20%, the maximum drawdown should not exceed $2,000. Number three is total trades, and this represents the overall number of trade positions taken by the trading system. So it helps to assess whether the strategy is aggressive or moderate by comparing the number of trades to the investing time frame. So for instance, if there are 200 trades in 3 months, it indicates an average of 3 trades per day, making it suitable for intraday trading. A smaller number of trades may be better suited for mid-term trading. And lastly, the key point that we will look out for is profit trades. And this indicates the number and percentage of profitable trade positions out of the total trades. It reflects the trading system's win ratio with a higher percentage, indicating a more successful system. Okay, so some common backtesting mistakes would be having unrealistic backtest results, do not overmine your data, getting the timing right, and incorrect assumptions. So how exactly do you backtest them? Okay, so you basically want to open your MT4 and click on the strategy tester button over here. But this feature is not available in the mobile version of MT4. Okay, and then this is what it'll look like. Click on Expert Advisor, input the EA that you're looking at. Okay, and then once it fully loads, you can click on Start. Yeah, so basically these are the steps. Select your EA, set your dates, and press Start. Okay, and then this is the graph tab, what it basically shows you. And if you want to look at your results, that's just basically the results tab. So it'll tell you the number of orders that you've put in, the lot sizes, and the profits or losses that you've made. Okay, and lastly would be your report tab. Um, yeah, so you can see it's basically a summary of your trades. So your profits, your losses, yeah, number of long positions won, short positions won, so on and so forth. Okay, so how do you decide whether to use MT4 or MT5? Let's do a really quick, brief intro to both of these platforms and compare them so that you can see which is more suitable for you. Okay, starting off with our intro to MT4, when you go in, this is what the interface looks like if you've never used it before. So it was launched in 2005, and MT4 has become the industry standard for forex trading. Um, it's renowned for its user-friendly interface, robust functionality, and extensive range of features tailored to both novice and experienced traders. So its key features include ease of use. So its intuitive interface makes it accessible for traders of all skill levels. Platform's design, you can see, is pretty simplified. So it's easier to manage your trades and conduct your technical analysis. Charting tools. So the platform offers advanced charting capabilities with various timeframes and a wide range of technical indicators. So you can see all of the tools that you need are right at the top here, or you can click on tools as well. Yeah. So you can customize your charts and indicators to fit your own trading strategy. Automated trading. So this MT4 also offers the ability to support EAs that we went through earlier, reducing the need for constant manual intervention. Security, MT4 is quite secure since it has data encryption to ensure the safety of trades and user information. And lastly, community and support. So a large MT4 has quite a large active community of users who share their strategies, their tools, insights. So it is a pretty collaborative trading environment. Now if we look at MT5, so MT5 was released a couple years after MT4 in 2010, and it was designed to offer enhanced trading capabilities and broader market access. So while maintaining many of the features that made MT4 popular, MT5 introduced several improvements and new functionalities, such as its multi-asset trading. So the main difference between MT4 and MT5 is that MT5 supports not only forex trading, but also stocks, commodities, and futures, and even crypto as well. So it makes it a multi-asset platform suitable for a wider range of financial instruments. Enhanced charting and analysis. So MT5 includes more time frames and built-in technical indicators than MT4, along with additional tools for comprehensive market analysis. So we'll go through what some of these differences are in a bit. Next is another difference is the economic calendar. So you can see below it offers you this tab, this calendar tab, and it features an integrated economic calendar, providing traders with real-time news and data that can impact market movements. Um, Hi, yeah. Has this webinar been? So this webinar is being recorded. If you would like the recording or you would like to rewatch this webinar, feel free to um feel free to email IronFX, the team. I think it's on the website. Yep. If you just search up ironfx.com, it should be on the website. Just email them and they can help you out. Okay. Another difference is the improved order management, which is more sophisticated order types and execution options. It also boasts faster performance and deeper market depth information. So that basically includes, it basically provides you greater insight into the liquidity and order flow of a given instrument. Okay, so MT4 and 5, some key differences. So here's a table, a summary of all the differences between MT4 and 5, but basically it depends on your needs and preferences. MT4 remains a favorite for Forex traders who appreciate its simplicity and the extensive library of available EAs and custom indicators. And on the other hand, MT5 is better suited for traders looking for a more versatile platform that supports multiple asset classes and advanced trading features. Both platforms are available on various devices, including our desktops, mobile, and tablets. So you can access the markets from anywhere, anytime. Okay? So some key differences in the tradable instruments we mentioned earlier. MT4 only allows for Forex. MT5 offers commodities like your metals, energies, stocks, as well as indices, and some crypto as well. Time frames. So MT4 only offers 9 time frames, which would be your basic M1, M5, M15, M30. Hourly time frames include your H1, H4, daily, weekly, and monthly, which is enough for swing and long-term traders. But if you prefer to get a deeper analysis, you can look at MT5, which provides 21 time frames with way more minute time frames and hourly time frames, as well as the daily, weekly, and monthly time frames. Okay, MT4 has 31 graphical objects such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. So if you think that's enough for you, MT4 might be a better option. On the other hand, MT5 offers 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools, and more. Okay. Next is trading orders. So MT4 offers 4 types of orders: the buy, stop, buy limit, sell stop, and sell limit. Whereas MT5 offers 6 types of pending offers. So pending orders rather. So there are those that are offered by MT4 and 2 more: the buy stop limit and sell stop limit. Okay. And of course, we mentioned earlier the economic calendar. So there is no built-in economic calendar in MT4, whereas MT5 offers an integrated economic calendar with useful and real-time info about macro events. But if you are more inclined to use MT4, there are a bunch of free economic calendars online as well, so it's not too much of a worry. So if you take a look at my screen now, this is just an example of the uh, economic calendar that we prefer to use. This is forexfactory.com, and it has a bunch of indicators But if you click on a date, you can look at we prefer to look at the weekly forecast. So the events for the upcoming week. But if you prefer, you can look at the entire month as well. Okay, so by clicking on this filter here, I normally like to look at the medium and high impact events that are indicated by this orange and red icon. Yellow is low impact, gray is bank holidays. So you can also look at the different currencies. You can narrow it down to just the currencies that you're trading and the different event types as well. So yeah, then we have all of the events for the upcoming week at one glance and the currencies that they will be impacting, the forecasted values, previous values, and it also tells you the actual data once it's released. There are a bunch of forums you can take a look at as well. Yep, some news as well from the different news outlets over here. So yeah, that's so MT4 not having a built-in economic calendar isn't that big of an issue since there are a lot of economic calendars out there that are free to use. So the one that I went through earlier is forexfactory.com, but there's also investing.com or Baby Pips also has a bunch. Okay. So MT4 versus MT5, which is a better pick? So some pros and cons of MT4. Pros, MT4 is perfect for beginner traders because it's easier and simpler to use than MT5. And MT4 is the best platform to trade Forex as it was initially designed for the needs of Forex traders. Some cons is that it has fewer trading options than MT5 and it's a little bit slower than MT5. MT5 allows trading Forex as well as stocks, indices, commodities, and crypto, has more charting tools, technical indicators, and timeframes than MT4. Some cons is that the MT5 can appear to be more complex platform for beginners, and there are fewer robot and expert advisor developers who opt for MT5. Okay, so some tips for MT4 and MT5. Firstly, would be to use the MetaTrader market scanner. Second, create custom indicators, use EAs. So we already went through at the start how to create your own custom indicators and use EAs. Fourth would be to manage your risk, and we'll go through some tips on how to do that. Stay disciplined and have realistic expectations. So let's talk a bit about how to manage your risk now. So here we have the most basic trade management tips. So here by confluence, we are talking about Fibonacci confluence, which basically occurs when two or more Fibonacci levels line up in the same area. But this also applies for resistance areas or any pivot point levels. So for your stop loss, we typically recommend you to place it um, beyond a key level. And the reason for this is because more often than not, price is attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before the market reverses. This is one of the reasons why most people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. Okay, and as for your take profit, we recommend you to place it before any key levels. Reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. So that's also one of the reasons why people complain that the market is being manipulated because they missed the take profit by one pip. Okay. Yeah, so in this example here, we are going in for a buy entry. So obviously we would place our take profit above and your stop loss below. So in this case, when you're going in for a buy entry, we'll place our take profit and stop loss below your key areas or your Fibonacci confluence areas. Okay, so for buy entry, place it below. For our sell entry, which is in this example, we'll place your before take profit and stop loss before any resistance areas. So basically like above it, like this. Okay, so again, for buy entries, we'll place it below your key areas, and for sell entry, we'll place it above it. That's an easier way to remember. So yeah, this is the proper stop loss and take profit placement to ensure that you maximize your wins and minimize your losses. Okay, so some other trade management tips, especially if you are trading on your MT4, MT5, would be to use a trading journal. So here's some tips on how you can set it up. And it's relatively straightforward. So firstly would be to choose a format. So this can be, you can opt for a physical notebook, a spreadsheet, a digital document, or specialized trading journal software. So it all depends on your preferences and the level of detail that you wish to track. Number two is to decide on the categories. So this basically means to define the categories of information that you want to include. So it can be the date and time, trade symbol, entry and exit prices, position sizes, stop loss, take profit levels, trade duration, and trade outcome. You might also choose to include trade rationale, market conditions, and emotional state. Capture trade details, that basically means recording any relevant information and being consistent and diligent in entering the details accurately and promptly after each trade. Analyze trade performance. Basically, you are going to regularly review your trading journal to analyze your trade performance by looking for patterns, trends, and areas for improvement. Emotional factors. So this is quite important and quite often overlooked because it's important to take note of your emotional state during each trade. So how you would record it would probably be taking note of any emotional biases such as fear, greed, or overconfidence that may have influenced your decision making. So this information will help you to become more aware of your emotions and develop strategies to manage them more effectively. Review and adapt. So again, you want to learn from your past traits and experiences, identify areas for improvement, and refine your approach. And lastly, maintaining discipline, basically ensuring that you treat it as a crucial part of your trading routine and commit to using it consistently. Okay, some benefits of using a trading journal include performance analysis, which is basically allowing you to analyze your trading performance in a systematic and objective manner. And secondly, learning and development. Um, this is pretty straightforward, but basically it's reflecting and learning on your decision-making process, identifying errors or missed opportunities that enables you to continually refine your trading strategy. Emotional awareness, we talked about this already. Risk management, we talked about this as well, but basically involves recording position size, stop loss levels, risk to reward ratios as well, so that you analyze how effective your risk management strategies are. And that's quite crucial as well. Trade planning and execution. So this basically involves providing a record of your trade setups, including the analysis and rationale behind them, and accountability and discipline, pretty straightforward, and confidence building. So, a trading journal can help you to boost your confidence by documenting your successes and your learnings, and you can review your progress regularly and build confidence. Additionally, having a record of successful trades can serve as a reminder during challenging times, reinforcing your belief in your trading strategy. Okay, that's it for my slides. We still have some time left, so let me just pull out our charts and we can take a look at maybe one or two charts together. So if you have any requests for any charts that you want me to go through, just pop them into the chat. Okay, are there any specific charts that you guys want me to go through? Okay, I see we have requests for AUD. So let's take a look at that. Okay, so I like to start off on our weekly time frame so that we get an idea of where prices are headed towards. Now, on our Aussie dollar, you see prices moving in this descending trend line. And you can kind of see price approaching the trend line again. Now, on our daily time frame, on our daily time frame, prices are kind of fluctuating a bit more, moving sideways. Now, on our 4-hour time frame, it's also kind of, it actually looks like prices are moving upwards here. Okay, let's see if we have any trend channels or trend lines here. Okay, we actually have prices moving in this ascending trend channel. Okay, so I'm just gonna go ahead and analyze this on our 4-hour time frame. So I'm gonna place my pivot over here. And you can see it's a good habit to try and pull back your level as far as you can so that you can see how significant that level is. Okay, so you can see here I have a couple of swing highs that have tested this level in the past. Okay, this is my pivot. And my first support, or rather my first resistance, mm, maybe up here. And my first support over here. Okay. Okay, now I'm going in with this Nike tick shape here, which we call Fibonacci extension, and 161.8 lines up nicely with our pivot. Okay, now I'm going in with a retracement. Okay, and you can see my 50% lines up with my pivot. Again, going in with my projections. Okay, my 61.8 lines up with my pivot as well. So you can see this area here where my pivot is at is a pretty strong confluence area. Okay, because we have 3 levels lining up. Okay, I think that's all the levels that we have. Okay, I'm gonna move my first resistance down. Maybe over here. Okay, and I'm gonna go in. So we are expecting price to continue in this ascending trend channel. Okay, but we are aware of this confluence area here as well, which might have a bit of resistance. Now let's look at our indicators. We have our Ichimoku and MACD. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it supports our analysis. Now if we look at stochastic, okay, stochastic isn't telling us much. If we look at RSI, okay, on our RSI, we see prices moving. We see prices moving in this ascending trend line. Okay, so yeah, pretty bullish signals here, just highlighting this confluence area with multiple swing highs and one swing low, as well as 3 Fibonacci levels forming a confluence area. Okay, any other requests? Okay, any other requests from you guys? Okay, if not, I think that's all the time we have for today. Thank you guys so much for joining me. If you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.